Good morning and welcome back to Almus Market Mornings, your daily dose of global financial updates. Now, if you remember, last week kept equities in the limelight with multiple indices across the world simultaneously hitting fresh all time highs. Now, we also saw some good data in terms of PMI numbers from various countries, but this week markets would be keenly watching for the PCE numbers from the US. Now, PCE is the US Fed's preferred gauge for inflation. Unlike the CPI, the Fed focuses more on the PCE numbers. The previous core PCE rate was at 2.9%, so a print higher than 2.9% can trigger some warning bells for the markets expecting rate cuts. Good morning, JK. What kind of narratives do you think will drive the market this week? Would like to know your thoughts.
Good morning, Swaraj. Yeah, I think last week was uh, more sedate in terms of the economic data. Yes, PMI numbers were encouraging, but they were not really market movers and did not really give a clear hint on monetary policy, which is the most focus on the market. So the corporate news obviously took the center stage, and that's why we saw the markets hitting new highs across the regions. And now they are settling down from the euphoria and waiting for more news now from the economy. And a lot of it will be available this week because we have the US GDP on Wednesday, US PC inflation on Friday. We'll also have German and Eurozone inflation numbers, which will be published this week. So a lot to look forward to. And in the meantime, till we get those numbers, we look to hear statements from the central bankers. Central bankers in the US have been once again now even more moderating the expectation on rate cuts. Some of them hinting that it can be as low as two rate cuts against the three cuts to which the market has fallen from their high of 1.5% expectations. On the Eurozone, officials have been saying that rate cuts will not happen before the Fed. There have been data from Europe which have been quite mixed. We had inflation expectations that moved higher as per the ECB survey, while the German IFO was steadier compared to last month. German GDP final reading came as expected, but the government has actually revised down their growth for 2024 to just 0.2%. And Germany has been one of the laggards of the Eurozone economy, keeping the European growth, quite subdued, flat growth that was seen for the last quarter in Eurozone. So it's a quite a contrasting picture that we're getting in US and Europe, at least as far as growth is concerned. US growing strongly, most of the indicators very positive. In Europe, it's quite mixed, although we did have some green shoots, but I think outlook remains still quite uncertain as far as Europe is concerned, whereas inflation in both the countries are on a watch. So that all that keeps the dollar quite range bound, because market is not able to decide which way things will move on the monetary policy, whether more hawkish or more dovish. So that's what the market is expecting. So that also explains the reason why market is focusing on the corporate numbers. In the meantime, we had seen a fall in US yields on Friday without much economic news or even any Fed members talking dovish also. This is put down to a lot of liquidity still around. We are hearing a lot of big fund managers running huge pile of cash, perhaps encashing on the big rise in the equities recently, and those funds could be flowing into the bonds, at least for now. So liquidity is driving the markets as of now, until we get real hard economic news, which we should be getting later during this week. Oil prices have again down because of inability to push through the resistance at 85, and there have been profit takers on the longs. But really, again, that is not a clear directional move that we are getting on the oil also. And that gives some comfort to the inflation watchers, because going forward, inflation can be not so high, at least from the the fuel side. On the dollar, expected to be range bound between 103 and 105. That's a broad range, of course, but only break of either of these can give a directional move to the dollar. So is the euro between 107 and 109. We had an attempt to break 109, but that has really failed, and we are back to middle of the range. GBP looks more supported because of stronger set of data that we are getting, higher yields that say UK pound is currently getting, as well as the government also saying that economy is getting into a stronger footing. The rate cuts are not likely to happen before August, whereas expectations for Europe and US is currently pegged at June. So GBP seems very well supported. Yen remains weak, hesitant to move up because of uh, authorities speaking against the one-way movement in the currency. But it's not coming down. The dollar is not coming down either on Japanese, and I think awaiting next push can come after the US data on inflation. Meanwhile, Japanese data has not been too encouraging to get into any sort of a bullish mode on the Japanese yen as well. On the rupee, we have tried to push to the support at 80 to 80, but so far that has been thwarted by good buying from importers as well as from PSU banks. We'll also have the GDP number from India this week, and market, after spending a lot of time at the lows in the USD INR and finding good buyers, there's a chance that we push towards 83 in the coming sessions on the USD INR, but that's still well within the range, and we don't have very strong indications for market to move either way in a big flows are continue to be good. So that is a factor that will ensure that the USD INR upside remains limited. Thank you.
Thank you, JK. And just quickly summarizing, a lot of data to look forward to this week. You have got US GDP, US PC, German inflation, even Indian GDP data is something to look forward to. But amongst all of this, central bankers from the US have been moderating the rate cut expectations. Now, the dot plot, which is basically Fed's estimate of how many rate cuts there will be this year, was at three. Basically, they were saying that there will be three rate cuts, but now some Fed members are saying it's possible that we see even lesser than three cuts. So that's one interesting point. In Europe, data also continues to be mixed due to Germany's underperformance. So overall, the currency markets have been rangy as market participants are assessing the direction of the monetary policy. On the rupee front, we are seeing supports at 82.80, which is being held with good buying seen from importers and PSU banks. It is possible, as JK mentioned, that push to 83 can be seen, which is still within the range for the USD INR pair. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.